Earlier this year, I was indebted to a tune of $5,000, and this is as a result of education loan, which I incurred during the course of my study at the university. You guessed right, it was my first time being in debt, and it made the whole period quite distracting and frustrating to me. So I understand what it means to be in debt, how stressful and tormenting it can be, and especially when you are indebted to more than one creditors. Luckily for me, and based on some very good strategies which I implemented, I was able to pay off my debt within 6 months. Today I am debt-free, and in this video I will be sharing with you the 6 strategies I adopted that helped me pay off my debt fast. Without further ado, let's jump right in. The first debt repayment strategy is knowing your financial position. By your financial position, I mean knowing your assets and your liabilities. And when we talk about your assets, we are talking about your income. What is your income strength? What is your salary? What are your investments? What is your interest in these investments? Those are your assets. When we look at the liability side, we are looking at your debt. Who do you owe? What amount are you owing? What is the minimum deposit for that particular loan? How many creditors are you indebted to? And very importantly, what are the interest rates attached to these individual loans? You ought to itemize all these points and know where you stand currently. So knowing your financial position will help you not to pay above what you owe to your creditors, and even not to get confused in that pathway to being debt-free. Also, I recommend that if you're not good with figures and finances and keeping track of your assets and also your liabilities and updating these accounts periodically, you can outsource this activity, you can outsource this strategy. And I mean, seeking for the services of a financial expert to help you in keeping track of these activities, in itemizing this financial statement for you so that you can direct your income and your assets to the right places. I remember when I was in debt, and without the strategy, I don't think I will be where I am today. I don't think I will be able to come out of this debt cage which I was. The second debt repayment strategy is prioritizing your debts. What do I mean by prioritizing your debts? It simply means cutting down on your expenditure. You are in debt and you want to be debt-free. You want to be free from the stresses of all these debt collectors, and you're making extravagant spendings. How do you expect to achieve your financial goals if you're making reckless expenditures? By prioritizing your debt, I mean you double cutting down on those activities, on those items which you spend your money on and which are not helping towards your debt-free journey. They are not contributing anything to making you debt-free. And for example, I mean taking a trip to the cinema, Netflixing, buying overpriced clothes, buying overpriced phones, and even eating outside in a restaurant. For you to prioritize your debt, you have to cut down on all these spendings. You may feel that if you cut down on all the spendings, the money you save from these activities may not be much because you feel that you are not spending much towards these activities. Let me put it to you that it may seem immaterial when you look at it at an individual scale, or when you accumulate them and look at it as a lump sum money, you find out that it's a very huge amount of money that will help you in reducing the amount you owe as regards to your debt. So every cent and dollars that you save from cutting down your expenditure matters. Implementing this strategy is a very good step in becoming debt-free. The number 3 debt repayment strategy is focusing on savings. I cannot overemphasize the importance of this particular strategy. You must ensure that your savings does not lack, because you are in debt. You are in a critical position right now. You are owing and you want to be debt-free. So you have to sacrifice some things to ensure that you're saving money towards making that deposit, towards becoming debt-free, towards your financial goals. And when we talk about savings, there are 2 aspects of this savings. You should be saving towards your debt repayment and also saving towards your investment. So it is advisable that you open at least 2 accounts when it comes to savings. That is the debt repayment savings account and the investment savings account. The debt repayment savings account, the money you put into this account is towards settling your debt deposits as they come. While the money you put towards the investment account can serve different purposes, such as making investment to get interest and also diverting that interest towards the debt repayment account to settle your debt quickly. And even the money in this investment account can be used to settle contingencies as they arise. So instead of borrowing in contingencies and adding to your debt repayment and elongating the period of being debt-free, you can just fall back on these investment accounts to settle your emergencies or your contingencies as they arise. So this investment account can serve as a buffer account, and it can also serve as your means whereby you make investment and yield interest on them to allocate it to your debt repayment journey. So savings is very important when it comes to being debt-free. I know you've probably heard of the 50-30-20 rule, which means you're allocating 50% of your income to your needs, 30% to your wants, and 20% to your savings. That rule is based on a normal situation. But when you are in debt, it is a special situation entirely. I don't think you will want to implement this 50-30-20 rule when you are in debt. The 30% which you are allocating to your want shouldn't be up to 30% as at this particular time. What you should allocate to your wants may be a little amount, which is about 5%. And the remaining percentage should go towards your savings account, which, like I mentioned, should be divided into two: the debt repayment savings and the investment savings account. Focusing on your savings will help you to a large extent in becoming debt-free. I did it in my time and I saw the result it yielded for me in my debt-free journey. And I'm very certain that it's going to yield a very good result too for you. The number 4 debt repayment strategy is expanding your income sources. I recall when I was in debt and I was depending on one income source to pay off my debt and be debt-free as quickly as possible. As time went by, I discovered that I was very wrong. I cannot depend on a monthly salaried income to settle this huge debt I had in the shortest time possible. So when I discovered that I had this loophole, I had to quickly fill it. I had to leverage on my skills and search for other means of making income. These extra income sources which I discovered then assist me to a large extent in clearing off this debt quickly and comfortably. So you have to expand your income sources, and you can do this by leveraging on your skills or on your hobbies or making investments and even engaging in agriculture. And when you engage in agriculture, there is a particular advantage it comes with. The money you spend towards groceries can be saved towards repaying your debt. And we are also talking about artificial intelligence currently, which you can also leverage on providing services to people to get this extra income. Just do anything as long as you're getting an extra source of income to pay off this debt, to add to your debt repayment savings account. And that is why strategy number 3 is very important when you talk about savings. You have to differentiate this account so that you can focus to a large extent in depositing money in this debt repayment account, not default in paying off your minimum debt payment. My recommendation to you as regards to this strategy is that if you are the type who shouldn't be exposing yourself to too much stress, I think you should work on that strategy number 1, that is knowing your financial position. And in that process of knowing your financial position, you should be able to state clearly how long it will take for you to pay off your debt. If you can't do that, seek the services of a financial expert. And when you've gotten that particular length, which you know you should be paying off your debt, let's say it's within 6 months or a year, then you can get an extra job within this debt repayment period of 6 months or 1 year. And after you pay off this debt within that period, you can stop. But otherwise, you should engage in an extra income source that will sustain you for a very long period of time, because you do not want to commit yourself to another debt crisis. It is very important for you to expand your income sources and seek for other methods of getting funds. If you're getting value from this video, give us a like and subscribe to our channel, and even drop a comment for us below. Strategy number 5 is pay your deposits together with your interest rates. Different lending agencies has their rules and regulations when it comes to debt repayment strategy and debt repayment deal and agreement. Some companies or some lending agencies can incorporate interest rates into the principal and tell you to pay them together, while some are interested in getting the interest rate first and talking of the capital later. Others may be interested in getting the capital instrumentally and talk of the interest rate later. Regardless of any of these deals which you have with these lending agencies, it is advisable that you always pay your minimum debt payment together with your minimum interest rate for the month or weekly. It depends on how you bargain it. If you sign a deal with a lending agency whereby the agency is focused on just the instrumental payment for the principal of the debt and pushing further the interest rate, what I advise you to do in this situation is that whenever you pay that installment, that principal installment to that lending agency, you should also ensure that the interest rate for that month, the minimum interest rate you have for that month, should be deposited in your debt repayment savings account. In this way, you don't lag behind in your minimum debt payment, both in terms of the principal and also the interest rate. With this in place, you are certain for sure to settle your interest rate later as they fall due and not default on your payments. And so paying your principal installment and your interest rates together is a very important strategy towards settling your debt quickly and working towards your debt-free journey. The last of this strategy is the debt repayment method. We have several debt repayment methods, but today we will be focusing on two major debt repayment methods, and they are the debt snowball method and the debt avalanche method. Now, this debt snowball method is more of a psychological advantage. The debt snowball method is about you focusing on paying the smaller debt first before heading to the next smaller debt and then the next smaller debt until you finish paying off all your debts. In the debt snowball method, you focus more on the amount of money you are owing and not in the interest rate which is attached to that particular loan. Like I said earlier, it's more of a psychological advantage, especially when you are a type that is motivated by small wins. To keep you going in the process of your debt repayment journey, you can adopt this method. For the small wins, the debt avalanche method is more of a financial advantage. It will help you to save more as regards to interest rate. You're focusing on the debt that has the highest interest rates to making sure that you balance and finish paying off that debt with the highest interest rate before moving over to the next debt with the highest interest rate. You find out that the difference between these two methods is that for this debt snowball method, you're focusing on the amount of money being owed, while for the debt avalanche method, you're looking at the interest rate. If you are the type of person who is motivated by big major wins, then you can adopt this particular debt repayment method, which is the debt avalanche method. And based on my own knowledge, I think I recommend this particular method. What works for everyone differs. If you're choosing the snowball method, it's going to work for you. It depends on your goal. It depends on how motivated you can be. If you're choosing the debt avalanche method, it's going to also work for you. It all depends on your determination and also your motivation. And that is the sixth strategy which I used to pay off my debt fast. In a quick recap, they include knowing your financial position, prioritizing your debt, focusing on savings, expanding your income sources, paying your deposits together with your interest rate, and lastly, the debt repayment method. Implementing these 6 strategies to the last letter will go a long way in helping you pay off your debt as quickly as possible. So what are the other strategies that you know that has helped you in your debt-free journey? I would love to hear about it. Please drop a comment for us below as regarding this particular question if you have an idea to contribute to teach others. If you've gotten value from this video so far, give us that like and subscribe to our channel if you're just watching our videos for the first time. If you enjoyed this video, here is another quality packed video which I'm linking in this video, which will be of a very huge help to you in your financial journey. Go check out this video over here. I will see you there. Thank you for watching and goodbye. I'm Chinyere-anyikaeme.